Hey everyone, and welcome back to Explain the Charts. Today, May 7th, 2025, we're diving into the SPY, the S&P 500 ETF, and analyzing it with both the latest news and the candlestick chart data. According to recent news, there's optimism around potential U.S. China trade talks, which is giving futures a boost. The market is also anticipating the Fed's upcoming rate decision and press conference. We will explore how these factors might influence SPY's price action. Let's start by looking at the daily chart to get a broader perspective. On the one-day chart, we can observe the overall trend and key support and resistance levels. Notice the significant drop in early April, followed by a volatile recovery. Currently, SPY is hovering around the 558 level, which appears to be a short-term resistance. A break above 560 would be a bullish signal, potentially targeting the previous highs around 570. If we look further back, we can see 600 as another previous high. Now, let's switch to the 1-hour chart to get a more granular view. The 1-hour chart will give us a closer look at the recent price action and intraday trends. On the hourly chart, we can see more detailed fluctuations. The recent price action has been choppy, indicating uncertainty in the market. Pay attention to the support around 557 and the resistance around 563 on this timeframe. These levels might act as key areas for potential reversals or breakouts. Now we will switch to the 15-minute chart. Taking a look at the 15-minute chart, we can examine the most recent price action in detail. This chart is particularly useful for identifying short-term trading opportunities and understanding immediate support and resistance. The most recent candle shows a close around 558.8 with small fluctuations. From these last four candles, we can see it has had trouble breaking above 560. Pay attention to these levels for potential short-term trades. Based on the news of potential U.S. China trade talks, a bullish scenario could see SPY breaking above 563 and potentially reaching 570. However, the Fed's decision could introduce volatility. A hawkish stance from the Fed could trigger a sell-off, with SPY potentially testing support around 557 or even lower. Given the current market conditions, a neutral to slightly bullish outlook seems reasonable, with careful monitoring of the Fed's announcement being crucial. Remember to always trade responsibly and manage your risk appropriately. In summary, key price levels to watch are 557 as immediate support, 560 as short-term resistance, and 570 as a longer-term upside target, with previous highs around 600 further back. Keep an eye on the news regarding U.S. China trade talks, as positive developments could fuel further gains. That is all for today's Explain the Charts. Happy trading!